So today I want to try a little bit of a different format. I thought it's interesting to look at what's happening in the markets to give you an idea and also to share with you what I'm going to be doing going forward. So firstly, when we look at the markets, the S&P 500 absolutely got smashed the last few days. And one of the main reasons for this is, of course, the Federal Reserve increasing the interest rates by 0.5%, which is one of the highest hikes in the last 2 decades. And the main reason for this is, of course, to fight inflation. With inflation levels going through the roof, as you can see over here, in March we already hit 8.5%, and it's only forecasted to be even higher, close to 10%. So obviously the Fed wants to do some actions to counter this high inflation. Of course, there are a lot of reasons behind this. The situation in China, what we have in Ukraine, a lot of factors impacting this. Plus, when we look at what the analysts are saying, they're predicting we're nowhere near at the bottom. So when we think it's bad, a lot of smart people are actually saying it might get a whole lot worse before it's going to get better. Some people are saying due to the recession and having to save energy, the light at the end of the tunnel will be switched off. Let's have a look at some of the tech stocks over here. I mean, you see Netflix since the beginning of the year down almost 70%. That's a massive drop from where they started a couple of months ago. Even Google, I mean, can you imagine, down 20%, which honestly makes it really quite attractive for me to buy some more stocks of. But that's a massive reset from where we used to be. And if we look at the most valuable company in the world, which is still Apple, even they're down by 13.5%. So a massive correction at the moment. And of course, a lot of people saying it's a good time to buy the dip, though others are saying it might drop even further. So it's a personal question you have to answer yourself. Nobody knows the future. But for me, at the moment, I'm still waiting and seeing in terms of stocks. But personally, I think we're going to see a bit more correction downward. And then I'm going to be looking into adding a few more stocks and of course buying more ETFs, especially the S&P 500 going forward. Looking at cryptocurrency, the picture hasn't been much better. When you can see over here, I mean, it's pretty much red all across the board. There was a couple of individual tokens that got a boost, that they were associated with the World Cup, etc. But the overall market and sentiment is definitely down. And we can see over the last few months, there has been more correlation between stocks and crypto. Bitcoin, the biggest cryptocurrency of all, has pretty much been trading sideways since a year or so. You can really see up and down, but really hasn't really managed to cross all-time highs from past times. But over the last 7 days, there's been a huge correction over here. And now we're down to 34,000 euros. And despite having dollar cost averaged in consistently over the last few weeks and months, now it's really attractive where I want to put even more money into it because I think it's a good price point. As much as I want to put more into it at the moment, I do think there might be a further correction downward, even potentially below 30,000 in the near future, but that is short term. Long term, I do think it's only going to go one way, but that's why it's very attractive to buy more of the Bitcoin, in line with the saying, be greedy when others are fearful and be fearful when others are greedy. So now definitely is the time to be greedy. One possible risk factor for Bitcoin, of course, going forward is the proof of work model. And we see now that New York is about to potentially ban the mining of Bitcoin in New York itself due to the intensity of energy consumption. But then again, I do believe other states are fighting to get more of those miners to them because they see the long-term benefit of it. So I'm not really too bothered, but it is something to keep at the back of our mind. At the same time, with Ethereum moving to proof of stake, a lot of people are saying that this might potentially bring a lot of security concerns because proof of work definitely makes it more secure despite consuming more energy. So it remains to be seen what will be the better model, but that is something to keep an eye on. Let's quickly talk about Crypto.com. As you know, I was a huge fan of Crypto.com. I've been a long time user for over a year or so, but recently there have been a lot of changes and I made a couple of videos about this. But it started a few days ago when Chris, the CEO of Crypto.com, shared another few updates to their Crypto.com Visa card, where they removed staking rewards from your locked up Crow coins, as well as cutting the cashback rewards that you would get every time you pay with your card. Following a huge outcry about it online, a lot of people went to Twitter and other social media to share their frustration, and I really appreciate that the CEO came out quickly and said they appreciate the feedback and they will look into making some changes, which they actually did a few days later by increasing some of the reduced benefits, not quite to where they used to be, but pretty much somewhere in the middle. So a little bit more attractive than what it used to be, but still they lost so many users, including myself, because I think it wasn't really communicated well, and it really makes you question, maybe a few months down the line there will be even more changes. So who knows? So that's why I decided to take out my crypto and send it elsewhere. Of course, it also had an impact on the pricing. Immediately as the first announcement of the changes came out, the price really plummeted quite a bit. But then again, so did the overall market. It really didn't do too bad. But of course, long term is the question, how many more people are signing up when now new competitors are coming out with pretty much similar, if not better products. So that's the question. They're spending billions of dollars to market and advertise. At the same time, if they don't give the offers and benefits, the question is, why would somebody go to their platform when there are so many other competitors out there? Also, I really found it interesting when you go to CoinMarketCap and look for Chronos, you can actually click over here on holders. And that's really interesting. You get to see who are the main holders. And really, I was really quite surprised. I mean, the 10 biggest holders hold 92% of the Kronos coin. I mean, that's really worrying in a way, because 10 people pretty much have a clear majority in controlling the project. Can be good or bad, but for me it's quite worrying, because if they decide to sell or what have you, they can tank the price for the coin immediately. So yeah, the top 100 own 95%. All others only own 5% of the total tokens. Now, quite often this is the case with smaller coins, altcoins. When we look at Bitcoin, for example, it's quite a different story. Let me pull it up over here, that the top 10 holders only hold 5.59%. So that's quite a different story and makes it more sort of decentralized, with more participants and not one main party controlling the entire process. Now, with the changes in crypto.com, a lot of people are rushing to look into alternatives, and one of the popular ones is Plutus Card. That's basically giving you a lot of perks and cashback rewards, up to 8% if you own and stake a certain amount of their native token, the Plutus. And they also offer perks such as paying for your Spotify and other things. They have different plans. Basically, they have a free plan, a paid one, and a premium one. And with this comes different rewards, and you can see you can select from certain perks that you would like to add. So really quite interesting. The only thing that held me back from signing up with them at the moment, at least, is some of their fees and limits. So if you use it locally in your country, and currently they're not present in the US, unfortunately. So if you're in UK or in Europe, it's a really good option. But then again, if you go outside of it, you can see some of the charges over here. I personally started going with Nexo, where I made a whole video about it, and I'll link it at the end of this video. But basically it's a really powerful platform, especially the staking rewards extremely high, probably one of the highest ones out there at the moment. I'm getting 5% on my Bitcoin in Bitcoin, or 7% on my Bitcoin in Nexo token, without having to lock it up, meaning I could sell it anytime and get the rewards. So that's really, really amazing. No other platform I've seen offering this. So some of the high staking rewards out there. Plus they also started launching the Nexo credit card, where you get up to 2% cashback on every single transaction. And that starts compounding your Nexo holdings, which later on you can convert into any other cryptocurrency or into fiat, cash it out, and use that money to spend elsewhere. So yeah, so far I've been really, really loving the platform very much. So looking at the market conditions at the moment, of course, it's really very much of a roller coaster. And honestly, I personally think it's going to get worse before it's going to get better. As tempting as it is to put a big amount of money right now and buy some of the shares or cryptocurrencies, I do think it's going to go downwards even more. That's why I continue to dollar cost average every single week into certain investments, at the moment mostly cryptocurrency. And why do I like cryptocurrency so much? Because despite going down in value, because of the nature of the market at the moment, I continue getting staking rewards, and that's paid to me every single day. That's basically a screenshot of my iPhone, where I'm gonna get my interest paid to me every single day of my various crypto holdings. So now I'm on my journey to getting close to $10 a day, which is $300 a month. And I mean, that's really not too shabby. That's paid to me for basically doing nothing. That's pure passive income. And that's the beauty of cryptocurrency, because keeping my money at the bank, it just loses money to inflation. Plus my bank actually charges me negative interest, which is crazy. I know, really tough times out there. It was much more fun last year when everything was in the green, constantly reaching new all-time highs. But that's the other part of investing as well. And you need to ask yourself, when Tesla reached $1,000, everybody said, oh my God, if only it would go down to $500, I would put so much money in it, because I saw the long-term potential. Now that it's getting closer to $500, what are you scared about? Fundamentally, the company hasn't changed at all. So now it's a great buying opportunity, but don't over leverage yourself. Dollar cost average in it. I know I keep on saying it, but this is the best way to make money even in a downward trend market. Guys, I hope you like this new format. Let me know in the comments what you think about it, and if I should be doing more of those in the future. As always, guys, thank you so much for watching. Stay healthy, get wealthy, and I'll see you in the next one. Ciao.